Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1629A, and today's date is August 3rd, 2018, and the title of the episode is, It's Not Noticeable, and It's Done This Way for a Reason. Let's get into the economic collapse financial news. Now, we've been watching the real estate market slowly implode on itself, and we've been looking at Australia, Europe, United States, Canada, and we're starting to see that things are starting to accelerate here. Vancouver housing in July, and this is according to the Real Estate Board of Vancouver, residential property sales tumbled by 14.6% from June 2018 and a whopping 30.1% from a year ago. In fact, a total of 2,070 transactions took place, which was the fewest since the year 2000. As both buyers and sellers continue to sit on their hands because they're very confused whether the recent price gains will continue or whether the housing bubble has already burst. This is what we saw back in 2006-07. People didn't know what to do. What's going on here? Traffic's drying up. Why are the prices falling? What is happening here? Sales of detached properties in July was just 637, a decrease of 32.9%. from the 949 recorded in July 2017, and the 1,079 apartments sold was 26.5% drop compared to the 1,468 sales in July of 2017. And no, this is not seasonal. Last month's sales were 29.3% below the 10-year July sales average. This is what it looks like when the bubble pops. We're seeing it in Australia. We're seeing it in Canada. We're seeing it here in the U.S. It actually just begun in the U.S., but we're already seeing the signs of it. Remember, we're in the hottest season for real estate, and to see what is happening here tells us that it's not going to get a lot better when we move into the winter months. It's actually going to get a lot worse. In the United States, the payroll numbers came out, and of course, as we know, the unemployment numbers, they're fake, phony, and false, and they manipulate this to the nth degree. The BLS reported that the July payrolls missed the amount that they thought was going to happen. They had these expectations that it was going to hit about 193,000, came in around 157,000, which is really meaningless because this is all manipulated anyhow. Now, this is the lowest monthly print since March. But what they did was they lowered the unemployment rate to 3.9% from 4.0%. And of course, as we know, the midterms are coming up. They're going to be lowering the rates. And we've seen this play out before. This is nothing new. Now, remember, a lot of the retail stores, the corporate offices, they're going bankrupt. People are being laid off. Toys R Us, well, they went bankrupt. And there were a lot of jobs lost, about 30,000 or so. But if we look deeper into the jobs report, what do we see? High wage jobs have actually been declining throughout 2018 as employers have shifted their hiring to low-wage occupations and replacing existing highly paid workers with less productive but cheaper individuals. Now, of course, why are they doing this? Because, as they've been telling us, employment is at the level of being full, where, wow, all these job openings, but we just can't find workers. If that is truly the case, wages would be increasing. We wouldn't see the opposite happening. It makes no sense. So that whole thing that they're telling us is completely ridiculous. Now, what about the college degree workers? Because what we're seeing right now is that the workers they're hiring, they're high school graduates or those without a high school diploma. Remember what the globalists, the central bankers, the deep state, what they wanted to do. With TPP, they were going to bring all nations down to the level of a third world country because they wanted a one world government. You don't bring everyone up to the United States level. You bring everyone down to the lowest common denominator. That was the plan. That's why this is part of the agenda, to have all these illegals come into the country. This way they can take those low-paying jobs, because the high-paying jobs, they're not going to exist anymore. We're still seeing this right now, because it doesn't happen, as soon as they push their agenda. It takes a little while, and this is what we're seeing. So what about the college degree or higher education individuals? What are they experiencing? Well, they lost about 233,000 jobs. That's kind of odd. And those individuals are finding it a very difficult time trying to find work. Now, what's very interesting about all of this is that many of the people have multiple jobs, low-paying multiple jobs. And remember how they figure out unemployment. If you have one part-time, you're a full-time worker. If you have two part-time, you have two full-time jobs. So the total number of multiple job holders in the U.S. spiked to 8.072 million, surpassing the recession high of 8.071 million hit in August of 2008, and the highest all the way back to 1999. Now, this is kind of odd because they're telling us that the economy is fantastic. Everything's great. Why do people need multiple jobs then? Low-paying multiple jobs. Is it because they can't find that high-paying job? And we just discussed that those high-paying jobs, they're declining. Companies are letting those people go, and they're getting low-paying workers to replace them. Now, there was something else that was even worse in the report. Now, they reported that there was a 2% increase in average hourly earnings. But when netting out the 2.9 increase in inflation, real wages actually declined by 0.2%, which was the biggest monthly drop in average hourly earnings going back to around 2012. So people are actually making less right now, not more. So if there's no slack in the labor force, we're at maximum employment. Why are the real average hourly earnings turning negative year over year? Because when you cannot find that worker, you raise the salary because you want to bring them in, supply demand. That's what this is all about. But we're not seeing this at all. We see the U.S. services economy. It has slumped in July. And following yesterday's disappointment in manufacturing data, Market's latest survey confirms the service industry slowed in July as higher prices are hurting margins and business expectations in a 6-month low. Now, it gets a little bit worse than that. The ISM's services survey tumbled with a big miss to its worst since August of 2017. And we also see new orders, they're crashing by about 6.2% to 57. This is the biggest drop since August of 2016. And the whole thing, as we're looking at all these different indicators, everything's starting to crash all around us. And we're seeing it big time in real estate. And there's nothing the central bankers can do at this time. I mean, think about what they've done in the past. Well, they allowed subprime people come in to purchase autos, subprime to come in and purchase autos. The real estate market, well, they were lowering the interest rates to allow more individuals to come into the market. Now interest rates are moving up. They also allowed no down payment. They also allowed no income check. I mean, where do you go from here? Now interest rates are starting to rise. But remember, the central bank, they don't want people to notice what they're doing. Now, the Fed came out and they said, well, we're not going to raise interest rates right now. We're going to hold it steady. Now, remember, Trump came out and said, hey, look what you're doing here. You're raising rates. This is not good. But you're the Fed. Do what you need to do. The central banks, they do things in the background so you don't notice them. So they're not called out. And they're very, very sneaky in the way they do this. And they always stay in the background like, hey, we're not doing this. We're making sure that everything is great. Go back to 1971. What were they doing at that time before we came off the gold standard? They were creating currency like crazy in the background. No one really noticed that. Then Nixon came out and he was like, whoa, look at this, because they knew what they were going to do. There's gold speculators in the market. Well, countries saw the central bank printing more money, and these individuals, these countries, they wanted their gold back. To stop this, well, they had to shut the gold window. They had to shut it all down. And to allow the central banks to move forward and create more currency and take control of the government, full control, I should say, they had to come off the gold standard. But of course, they made it seem like it was in our best interest and they did things in the background. They're doing the same thing right now. So what are they doing? Well, the first thing we know is that Trump called out the Fed, that they were raising the rates, and this is not good. So the Fed said, okay, he put that out there. Let's do the following. Let's not raise rates. Now remember what the Fed is doing here. They're doing two things. They have their balance sheet of like $4.5 trillion worth of toxic crap on their balance sheet. Well, it's not toxic anymore because they blew up the bubbles. They bought it for pennies on the dollar. They blew up the bubbles. Now they can let it go and cash in on it. So they have two things where they're going to drive this economy into the hole. They have the rates that they're going to raise. We saw this back in 2006, 2007, going into 2008. And they had to then quickly cut it off. And they started to drop the rates and the economy started to fall apart. They saw this happen. Now what they're doing is they're raising rates very, very slowly. Before they were able to do it a lot faster. But they know that the economy will completely rip itself apart if they raise it like 1% or 1.5% like they were doing back in 2005, 2006, going into 2007. They also have their balance sheet where they're unwinding. And they know that this is going to cause a problem. So they held off on the rate increase and they accelerated their balance sheet normalization where they unloaded more of this crap that they have on their balance sheet. Now remember, the Fed came out and they said they were going to discontinue the Fed graph, the data of their balance sheet normalization. They don't want you to see the timing of when they unload compared to what's happening in the stock market and everything else. This way you put two and two together and you start to figure out what they're trying to do here. This is why they're also changing the yield curve calculation. This way you can say, hey, look, the yield curve, it's not inverting. We're not heading toward a recession. Everything is fine. So what they're doing in stealth mode right now, they are pushing this to the extreme. So when we look at this, we can see that in July, the QE unwind accelerated sharply. According to the plan, the Fed was supposed to shed up to $24 billion in Treasury securities in July, up from $18 billion a month in the prior 3 months. Over the 4 weeks ending August 1st, the balance of the Treasury securities fell by $23.5 billion, the lowest since April 16, 2014. Since the beginning of the QE unwind, the Fed has shed $129 billion in Treasuries. Total assets on the Fed balance sheet for the 4 weeks ending August 1st dropped by $34.1 billion. And what we're seeing here is they're accelerating their unwind. So what I think they're going to be doing right now is they're going to be flipping back and forth. Oh, we're not going to be raising interest rates. Let's push the unwind to the edge here. And they know as they do this, it's going to disrupt and hurt the economy, but they don't want to be called out on it. This is why they're changing data, hiding information, so nobody really figures this out. Then they go back to the interest rates, and I believe probably later this year they'll raise the interest rates once again, slow up on the unwind, and this way nobody will figure this out because the corporate media, they're not really reporting on the unwind and all this other stuff that's really going on and putting all this together. They're just saying they're doing this for the benefit of the economy, which they are not. They're not doing this for the benefit of the economy. They want to bring it down. They want to point the finger away from them. This is how they work. They'll blame it on the people. They'll blame it on Trump. They'll blame it on another country. But we see right now they're going to try to control the narrative. This is why Trump came out and actually called out the Fed. He's doing this on purpose. Both of them are trying to control the narrative. The central bank is going to be bringing down the economy. Trump's going to be bringing down the economy. And remember, Trump, the Patriots, they're using all of the same calculations that have been used since 2008. And they're pushing this to the extreme, letting these agencies do what they do best, and that is manipulation. This is why they can turn around and say, what has been going on here? You've been telling us that the economy is fantastic. Has the Fed been lying? Because the Fed just came out and they said the economy is strong. They're setting it up to blame Trump. They're going to bring in the tariffs. They're going to bring in what he's been doing, saying that it is his economic policy. Trump and the Patriots are going to turn it around, saying, no, it was the Fed. Here's the proof. Unwinding their balance sheet, the interest rates, and we don't even know what else they've been doing. We need to find out. We need to audit them. We need to take control of the Fed. This is the plan. This is the end game. And we can see that we're heading towards this. And we're going to be going through this transition. It's going to be rough for some people, easier for others, but a lot of people are going to be shocked. And this is why you need to be prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.